Good day, everyone. Thanks for tuning into my presentation today. In this video, I'll be presenting on behalf of the Worldwide Healthcare Trust and the Biotech Growth Trust, two longtime Frostrow clients. First, allow me to introduce OrbeMed to those who may not be familiar. OrbeMed is headquartered in New York, and we are the largest dedicated healthcare investment firm in the world. We recently just celebrated our 25th anniversary. We're very proud of. We're also very proud of our long-term track record of success over that period of time. And we invest across all components of healthcare, all stages of development, all subsectors, geographies, cap structures. And this is across multiple investment platforms, including public equity, private equity, and royalty and fixed income as well. Last year at this meeting, we literally just closed in our first London office. So we're celebrating an anniversary of sorts here today, having an office here in London at St. James Square. So far, it's home to a royalty colleague, Dimi Whedon, a private equity colleague, Dina Chaya, and any visiting colleagues such as myself. And this gives us truly global presence now with offices in New York, London now, of course, San Francisco, Mumbai, Shanghai, Tel Aviv. And for those of you who don't know me, I've been a part of OrbeMed for over 20 years now. And together with the managing partner of OrbeMed, Sven Borho, I manage the Worldwide Healthcare Trust with my colleagues, Jeff Shu and Josh Golem, who manage the Biotech Growth Trust. And this slide really shows the rest and the depth of our public equity team, dedicated analysts for biotech, pharmaceuticals, medical technology, healthcare services, life science tools, diagnostics, emerging markets, as well as our deep pool of traders and operational support, including a head of trading who's been with us for almost 2 decades, our chief risk officer who's been with us from day one, a quantitative analyst, a technical analyst, and of course, our head of ESG as well. And as a firm, we manage roughly 17.5 billion US dollars spread across public equity, private equity, royalty income fixed strategies, as I mentioned previously. And you can see here on this slide where the trusts fit in with the Worldwide Healthcare Trust really as our flagship fund. And at 140 employees, we're very proud of our human capital at OrbeMed with over 30 MDs and PhDs like myself. For comparative reasons, you can see here a snapshot composition of the two trusts sort of side by side. And we really consider the Worldwide Healthcare Trust a one-stop shop, if you will, for everything healthcare, like pharmaceuticals, but not just global large caps, but specialty pharmaceutical companies, generic drug makers as well, biotechnology across all cap structures, medical technology, healthcare services, life science tools, Japan pharmaceuticals, very important for us historically, as well as emerging markets and a sprinkle of unquoted investments with a real focus on innovation and growth on a global basis. And the Biotech Growth Trust, of course, is dedicated to biotechnology, as the name implies. Market cap distribution is also very different between the two trusts. The Worldwide Healthcare Trust is very large cap focused, 80% large cap, 20% mid cap. And this is against an index that is 100% large caps. Whereas the Biotech Growth Trust is a very different split, roughly 30% large caps, 70% mid caps. And whereas the benchmark there is almost the inverse of that. But my presentation today will mostly be predominantly focused on what we're excited about for 2024 and beyond, perhaps with a slight bend to biotech so that I may discuss both trusts at the same time. So let me start there with biotechnology, because as we all know, the biotech underperformance has been very well documented now, really since the launch of the COVID vaccines in early 2021, which marked the high. The sector has undergone a record-setting drawdown, the largest absolute sell-off, the largest relative underperformance versus the S&P, and the longest duration of underperformance we've ever witnessed. But after 2+ years, I think we're finally at a turn, but there is a long way to go. What has been the key to the turn? Well, we can certainly debate interest rates, They're no longer on the rise. That's one reason for sure. We can debate whether they're going to go down later this year, but the real key has been the inflection in M&A across the biotech space. You can see in this chart here the unprecedented acceleration of M&A over the past 2 fiscal years to a record high number of deals in 23 for a deal value in excess of $110 billion. But why has M&A inflected? There's been a number of reasons for that. First, and perhaps most importantly, large cap pharma is facing another patent cliff. And for those who've been around for a while, this is very reminiscent of the early 2000s when the first major patent cliff came into vogue. And now we have another one, really from 25 to 2030. And a number of major blockbuster products are going to be losing their exclusivity, and sales will erode substantially. And there's up to $250 billion of branded sales at risk, leaving major gaps in revenues and earnings for a number of companies that they need to fill. Second, drug price reform is coming to the US in 2026. This will further pressure top line of many companies in the second half of this decade. Third, small cap biotech valuations are at all-time lows, as this chart shows on a market cap to net cash balance sheet ratio. Yet at the same time, biotech innovation is at an all-time high. So this has really created a perfect storm, in my opinion, a massive tailwind, if you will, for an M&A frenzy like we have never seen before. So I guess the question is, will it continue next year? Is there more to come? And we think the answer is yes. Why is that? Well, the large cap executives have told us as much. Look, every year, Sven and I are always optimistic about M&A because we see the innovation in the space, especially biotech. But a key indicator every year is the JP Morgan conference, which kicks off the year in January in San Francisco. And the talking points there were all supportive of additional M&A in 2024, despite the robust 2023 that we just saw. We've already had 16 deals in the first 16 weeks of the year. In fact, if I include today, I think we're up to 17 and 17. And this is already ahead of last year's incredible pace. And this M&A is making a real impact in the trust's performances with both outright direct holdings of some of these takeouts in each fund, but also via a proprietary M&A swap basket that we've constructed and we manage here at OrbeMed that has had over 20 takeouts since we first conceived of it back in April of 2022. And that was when the inflection really started to happen. It's really driven out performance of the Worldwide Healthcare Trust in the latter half of this fiscal year and has really added to some incredible outperformance for the Biotech Growth Trust to start the calendar year of 2024. Switching gears a little bit, an update on the US Food and Drug Administration, if I may. You know, of course, the FDA is a critical legislative regulatory component of the healthcare industry, and I can report that the current situation at the FDA is very positive, from the commissioner all the way down. And this is despite a modest dip in approvals in 2022, but 2023 was another record year for new drug approvals. Many notable examples like Leqembi for Alzheimer's disease, or the first ever gene therapy approved for Duchenne muscular dystrophy from Sarepta. But what I find most impressive here is the 400 new drugs approved over the last 7 years. This is by far the most productive time the industry has ever had in probably 20 years, despite the hurdles for a new drug to get approved that keep getting higher and higher to accomplish every single year. This is very impressive. And we expect this to continue in 2024. We have a pretty good line of sight of some early approvals that could be really exciting, including some that has already happened. And some of these drugs are first in class, best in class, or represent some type of novel pioneering technology. And this is very important as we consider reimbursement or the commercial opportunity for some of these new products. We've had 12 new drug approvals in the first quarter of the calendar year. We've had another handful in April. So the pace of new drug approvals continues to be very brisk on an industry-wide perspective. So what else drives these stocks higher? and I think this is the real meat of the presentation, quite frankly, but it's innovation. And there's no better example of innovation than in obesity. And I kind of say that tongue in cheek because, to the surprise of many, this is a 20-year-old class of drugs, but it's really taken the market by storm in 2023, given the popularity, the efficacy, and safety of the latest generation GLP-1 class of drugs. And importantly, I think we're just getting started. The launch of Zepbound by Lilly late last year has been record-setting, and it's been an incredible uptake despite supply constraints so far this year. The global rollouts we're still going to be watching. So far, they've been small and calculated, again, due to supply. But what's been really amazing is that Novo, ex-US, the launches are all out-of-pocket paying, and we're still seeing patients clamoring to pay the full price of these drugs in those markets. The biggest question, of course, for 2024 is on supply. How much of these drugs can Lilly and Novo really make? That remains a little bit unclear, but we know it's going to increase as the year goes on and as we move into 2025. And just this week, as we finish the first quarter earnings, both Lilly and Novo were able to increase their guidance for top-line sales into year-end, and both gave constructive commentary on supply increases for the rest of the year. And it's been incredible because the demand has been insatiable, and I've never seen anything like this phenomenon ever in my 30-year career. But the big question for me is, how much can they really sell by the end of the decade? We first started discussing $100 billion market opportunity last year, and many raised their eyebrows on that. Well, we're way past that now. That is no longer in doubt. The real question now I have is, can it reach $200 billion in 2030 once we have new entrants and new novel oral alternatives? But the real game changer for this class of drugs has not just been the impressive weight loss, but really the landmark data from the SELECT study. This was a trial that reported out in November of last year that showed that these obesity drugs, in this case Wegovy specifically from Novo, could substantially lower the risk of you having a heart attack, stroke, or death by 20%. As a reminder, this was a first of its kind trial, 18,000 patients across the globe that started before COVID was even a thing. Patients were followed for 5 years who were overweight and had some sort of cardiovascular disease risk factors. This trial was a smashing success. All of the endpoints were positive. The biggest one, as I mentioned, the 20% reduction in heart attack, stroke, or death, cardiovascular death. And this benefit accrued very quickly, as early as 3 months in this bottom chart. And the benefit continued to extend beyond the 4-year follow-up period. Very impressive indeed. And all of the secondary endpoints were also positive. Decrease in heart failure, decrease in death from any cause, a decrease in coronary revascularizations, decrease in hospitalization for heart failure or unstable angina. Nephropathy was improved, lipid measures improved, inflammatory markers were down, blood pressure went down. And most interesting maybe is time to onset diabetes was also extended, suggesting that this drug could actually prevent type 2 diabetes in patients who were overweight. This was a watershed moment for the industry, opening the door to access and reimbursement across to millions of people. And in fact, just last month, the FDA recognized this landmark achievement and granted full approval of SELECT, making Wegovy the first ever treatment to be approved for risk of serious heart problems with patients who are overweight. Again, a landmark approval, and shortly thereafter, the U.S. federal agency that provides health coverage to seniors in the U.S., which is known as the CMS, quickly followed up with a memo indicating that it will add Wegovy to formularies, opening the door to coverage for an obesity medicine for the first time in its history. Incredible. Alzheimer's disease, this is another great example of unprecedented innovation in healthcare, as it's been almost 30 years between drug approvals for Alzheimer's patients. And Leqembi, most importantly, is the first ever disease modifying agent to garner full FDA approval. Neurologists and specialists continue to rave about the data that came out previously and the clinical benefits of this drug, which effectively allows patients with Alzheimer's disease to add 24 to 30 months of normal living to their lifespan, as this drug definitively slows the progression of this really incessant disease. Yes, the launch has been slow in 2023. The infrastructure to deliver this drug to patients in need has really been absent, and it's left Eisai, the pioneering company in this space, to build that infrastructure. And so the launch has been measured and very deliberate. But now, at the start of 2024, it's really starting to inflect, especially over the last 2 months. And of course, Lilly will be launching their own offering in the second half of the year, which I think will be a boost of uptake for the entire class. Oncology has been a well-documented hotbed of innovation over the past decade, and I've spoken about it extensively over the past 10 years, especially with the success of the first generation of immuno-oncology agents. And reminder, those are the drugs that boost your body's own immune system to fight cancer and kill tumor cells. Well, the next generation of IO agents are here, and we're going to get proof of concept data across many targets in 2024. I think this is going to be very critical for the space. ADCs, or antibody drug conjugates, these are drugs that are like heat-seeking missiles that quietly and deliberately bring a deadly payload of chemotoxins directly to targeted tumor cells. They are the hottest topic in oncology right now. Been a lot of M&A in this space, but Daiichi, another Japanese company, is the worldwide leader by far in ADCs, both commercially but also developmentally in their pipeline. They have relationships with both AstraZeneca and Merck. Another thing I'll mention quickly here is bispecific antibodies. These are antibodies that are new and novel that can possess two different targets in one drug. These are probably the next big thing in oncology. And here, again, AstraZeneca is best poised to establish a new paradigm in the treatment of solid tumors, and we await multiple readouts from their pipeline this year. Vaccines. I know there is some fatigue in healthcare about talking about vaccines and taking vaccines because of COVID, of course. But I will tell you that innovation in this space is simply unparalleled. And successful vaccines are getting premium prices, and they are unequivocally the longest and most durable franchises there are in healthcare. And this isn't just about mRNA. This is about a whole platform of different opportunities going forward. For example, like RSV, which is a seasonal yet very serious respiratory virus. GSK has just presided over the best vaccine launch ever here in RSV, outside of COVID, of course. But it's been very impressive that the uptake here, and there's a lot of competition. Pfizer in pneumococcal space, which is a bacterial vaccine, they're the incumbent leader, but Merck is on the precipice of a new product approval that we think is clearly superior. And there's also some next generation opportunities in the pipelines for later in the decade that could be even better. And also interesting, I'm going to give a shout out to therapeutic vaccines. These are vaccines that don't prevent disease, but rather treat disease, like certain cancers with Merck and their partner Moderna, and infectious diseases, where GSK is now an emerging leader there. So we're watching this space as there's a plethora of new vaccines that are poised to become blockbuster products that could last for decades. Continuing with innovation, this is a bit fun. Last year at this same event, I showed you a troika of slides here with major catalysts and some of the things that we were working on. And so I've brought them back here in this single slide as a bit of a scorecard, if you will, of sorts. And what does it show? Well, there was roughly about 16 different items or catalysts that I discussed last year. And 14 of them were positive. There was one delay. But really, it shows you what a great year it was in 2023 from a science and technology perspective in this industry. So I tried to recreate something again for this year for 2024, and I sat down with my associate the end of the calendar year and we created this. We were looking for another 12 to 18 catalysts. And rather unintentionally, we populated this slide with 36 different major catalysts that could re-rate stocks in 2024. This is more than double what we were contemplating last year. And it could have even been even more. I could have almost made a second slide here. And some of these catalysts have already started to come through. Again, positive catalysts in this particular space have the opportunity to really drive valuations over the next 18 months. It doesn't have to be just commercial success. We saw how Lilly has re-rated over last year, even before their obesity drug was officially launched. And we've seen important moves this year with Daiichi already, for example. And again, even the obesity drugs incumbents have had some incredible data also as well for next generation items. And so those stocks are up as well. So there's literally a plethora of catalysts in 2024. And I look forward to showing you this slide next year with all of the updates. And finally, and real quickly, this is effectively my last slide, but I did want to comment on the looming presidential election in the US this year, because I know every 4 years, and I've lived this through many cycles now, there is a ton of hand-wringing for this event in healthcare. But for the first time in my 25, 30-year career, I think this will be a non-event for the industry. And why is that? I will articulate 3 reasons. First of all, we're at a split Congress right now. And I think it's a very high likelihood that the status quo is maintained. And a split Congress just effectively means the government is in gridlock and nothing of contest can be approved in that type of environment, which is good for healthcare. No scary legislation on the table. I also think that there is a reasonable chance that there's a Republican sweep. And the Republicans as a party that's historically pharma-friendly, and ultimately the industry thrived under Trump's previous administration, for better, for worse. And so I think that is a possible outcome. And then finally, even on the remote possibility that there's a Democratic sweep, I think things remain mostly status quo there, because the Biden administration in his first term already accomplished his signature healthcare legislation, which was the Inflation Reduction Act, which included the drug price negotiations that I already referenced already. That's already law. So while the headlines ahead of the election could be scary at times, it's going to be more bark than bite, in my opinion. I think status quo remains. So let me conclude here and discuss our playbook for 2024 and beyond. And if I could summarize my presentation in 3 words, it would be innovation, innovation, innovation. And this has really been the hallmark of the trusts over the past decade. And we expect this era to continue, quite frankly, for another decade. That's what this is all about for us. New products and clinical data will continue to drive valuations and create real opportunities in the space going forward. M&A, as I discussed, will continue to be a key driver, particularly in biotechnology, and both trusts are poised to benefit from that. As biotechnology stocks finally seem to be turning a corner here for the long haul, the underperformance of biotech over the last 2 years and healthcare in general last year is really unsustainable given the level of productivity we're seeing broadly across the industry. And all of this really underpins our bullish outlook for 2024. So with that, I want to thank you for listening and thank you for your continued support of the Worldwide Healthcare Trust and the Biotech Growth Trust. Cheers, everybody.